news at Singapore here is today I want to talk about CNH currency bond of the China Development Bank. I bought this one and why. First of all, what kind of bond it is issuer is a China Development Bank, currency is a CNH. Coupon rate is a 3.03% per annum. Coupon is a fixed. Coupon frequency is a semi-annual, 6 months base. Then the issue date is a November 27, the 3-year term. Credit rating is a S&P and Fitch is a A+. Exchange listed Singapore market, SGX, the seniority, the senior but unsecured. That's the bond information. Who's the China Development Bank is this bank is a kind of a quasi-governmental bank. Is who's gonna actually driving like a domestic big infrastructure project, and also support like a company who's gonna drive like a belt on the road strategy for all the China. And this is a Wikipedia website. This describes that debt issued by the China Development Bank are owned by the local banks and are treated as a risk-free asset under the proposed PLC capital adequacy rules. The same treatment as a PLC government bond, so which means basically the quasi-government of this organization. And this bank is the second largest bond issuer in China after the Ministry of Finance. What the CNH currency means? Offshore, this one is a version of the Renminbi. Mean like Renminbi has a CNY is used in the mainland Chinese, and CNH is used in the outside of the mainland China. Then the CNY ratio is decided by the central bank PBOC. CNH is a totally free market basis, but the most likely is a CNH follow the CNY ratio. Rating is which actually share the their rating information in the website here. Rating is A+, outlook stable. Then the why A+ outlook stable is if anything happens, extremely high probability of the central government supporting the bank in a timely manners. So this is a kind of quasi-government again. Then the investment grade, this one A+, really high, mainly because the China rating is an A+. So that's why the all China companies maximize the A+. Then the outlook is stable. Fitch actually describe when that like a negative rating action happens. So example here is if a significant reduction in the government ownership influence happen, material change in the policy happens, or maybe negative rating happen. But as you guys know, it's unlikely on this, especially for the 3 years. Now, where my buy idea basically came from is mainly the two basic reason is hedge the USD depreciation. Also like increase the CNH portion in my currency portfolio is my base currency portfolio, the USD, Singapore dollars, Japanese yen, the Hong Kong dollars. I don't have much exposure for the CNH. Then as you know, CNH is appreciate so much this year. Is how we can like hold CNH is only the CNH currency basis, or like own the CNH on the bond basis. So how we can like diversify our currencies to the CNH is that's my first reason. Is the second reason is unstable recurring cash flow and at least a big inflation. So holding cash is okay. At least I just want to beat the inflation. Then the US. So talking about USD depreciation hedge first is this is a Goldman Sachs report. Is they said like US dollars could fall by 15% by the end of 2023. Actually, maturity date of this bond. Then especially the Joe Biden presidency would mean a more multilateral approach to the foreign policies, particularly US-China relations, that could boost the Yuan against the dollars. That may happen. Then the US dollar to CNH chart is like that. This is a year to date. So when 2020 start about 7, this is gonna like a CNH depreciate to the 7.2. Then the CNH appreciate US dollars a lot, about 7% to 8% now. Next is the inflation. I want to beat the inflation. So China inflation focus 2020 to 2025 is less than like 3%. What about if I just keep the US dollars? So US dollars inflation ratio 2020 to 2023. This is a FOMC focus is this is less than 2%, and the FRB actually is unlikely to increase like their interest ratio. This is the IMF one is this is also low as well. So entry and the exit plan is I bought IPO price when IPO is then that took 3 years option. I have a 5 years option as well, but the 2023 is a good year. Is so FOMC is basically the loading out quantitative is maybe at least 2023. Then that's why I think something US dollars appreciation may happen after 3 years. So basically the yield estimate at the time is about 3.4% above, but basically the oversubscribed, that's a yield is down to the 3.03%, but that's okay, at least beat the inflation. Then the exit plan, this one is just a hold until maturity, that's 3 years. Is I just paid like a 50 basis point commission. If just considering the commission itself is I can get the 2.8 or 2.9% yield, is that beat the inflation, that's fine. So chart is kind of since inception. The issue day is November 27. Actually, not much, but the hope is this 3 years is this appreciation happen. If I have any chance to find a good investment based on the CNH, is I'm going to sell this one. Like I move this one to the other investment one. Okay, thank you for watching my video, and a good deal and a good day.